Welcome to today's video. I'm Richard Chapo, an internet lawyer with SoCalInternetLawyer.com. Today we're going to discuss a topic that aggravates online entrepreneurs to no end. That is the online sales tax. The focus of today's video is really the history of the tax, so you know where we've come from and where we're going. So we have to start way back in 1992 when discussing this sales tax with a Supreme Court decision called Quill Corporation versus North Dakota. Quill Corporation was a company that was sending out catalogs. If you remember back in 1992, if you're old enough, there used to be very large catalogs that would be sent out monthly, and particularly around holidays. You had things like the Sears catalog, and they would produce massive sales. And the reason for that was that there really was no commercial internet at that time. I know, hard to believe. People actually had to go to malls to buy things, and you had limited choices, and it was horrible. Truly horrible. But nonetheless, the question in the Quill case was, well, if a company is outside of a state and they send send a catalog in, and somebody reads and makes a purchase, does that company have to pay sales tax in that state? And the short and sweet answer from the Supreme Court was no. And the Supreme Court focused on what's called the nexus, and they looked at whether there are enough physical connections with that state to give rise to a duty to pay the sales tax. And since, in this case, Quill Corporation had no facilities or employees or anything of that sort in North Dakota, the court ruled that Quill was off the hook. And we proceeded forward with that ruling as the fundamental law on sales tax. Then the internet came along and kind of changed things. We got into a period known as the Amazon Wars. And so what happened in that situation was states were very unhappy because they were losing out on revenue, because companies like Amazon were doing online sales, not collecting and paying sales tax, and were taking sales away from local retail establishments that would have collected and paid those sales tax. And so at that point, you run into a situation where the states started getting very motivated to try to find a way to collect sales tax. And they came up with an interesting argument. Many states started arguing that affiliates for companies, even though they were independent contractors, constituted a physical presence in the state, and thus created a nexus. And that online companies would need to collect and pay sales tax. And so the Amazon Wars went on for about 15 years. And you had all kinds of back and forth shenanigans, and it got very, very interesting. So, for instance, a state like New York came forward. They were one of the initial leaders and said, yes, if you have affiliates in our state, you have to collect and pay sales tax. And Amazon's response to that was, okay, we're terminating all of our affiliates. And so all the affiliates in New York had their accounts terminated one day, lost out on all their future revenues, their business models. Those that were completely reliant on that business model, they were in trouble. So nobody really looked good at the end of the day when it got into these wars. Amazon tried the same tactic with a number of other states, but eventually it became apparent that it wasn't really a long-term strategy, because Amazon needed those affiliates to generate revenue, and so did other companies. And so things went back and forth for years, with courts making different rulings. Some courts saying yes, affiliates were sufficient to create the nexus, and other courts saying no. So eventually, in its usual quick manner, the Supreme Court decided to look at the issue and finally take it up after numerous challenges, and did so in a case called South Dakota versus Wayfair. And this occurred this past June that we got the ruling. You don't see a citation up there on the board, and the reason is it's recent enough that one hasn't been created yet, because they'll publish one at a later point in time. Regardless, the South Dakota versus Wayfair decision has received a lot of publicity, as you might imagine, and most of the commentary is dead on, but a lot of it really doesn't cover exactly what the Supreme Court said, and gives a misguided interpretation to people. So it's very important that you understand the specifics of it. We'll get into the specifics in the next video, but just as a summary, South Dakota versus Wayfair does not say that states can collect sales tax from online businesses without any limitations at all. There are limitations put on the ruling, and they look specifically at what kind of a burden does it create for small businesses. So if you're an Amazon and you're moving huge amounts of revenue and huge number of sales, you're going to have to pay that sales tax. But the ruling doesn't say that if you're a small blogger selling courses, and you sell 300 courses total, and say 5 are in North Dakota or South Dakota, that you have to collect in sales tax and pay sales tax in those states. And any article or video you're seeing that says that is wrong. It just is. Now, there are all kinds of intricate things that we'll look at with that decision. But the general idea now is that if you're online and you're selling products, you're probably going to have to pay sales tax, or at least you need to consider it, because in certain jurisdictions, you're probably going to meet whatever thresholds exist that require the payment. So again, we'll have more videos up on this. I'll create a playlist for it. So make sure you go through and take a look at those playlists. That's it for today. Thanks.